We are live, ladies and gentlemen. Welcome back to the regularly scheduled programming in between 10 and 11 p.m. Eastern Standard Time. We are live Sunday night through Thursday night, minus the last couple of days. I've been quite sick and not able to do the live stream. But if it is that time, 10 p.m. to 11 p.m. Eastern Standard Time, and it does not say live in the bottom right-hand corner of your screen. Unfortunately, you are watching the recap. Go ahead, click back on the main channel, refresh the page, and get yourself on the latest live stream, baby, because we got a lot to talk about, and it's getting quite interesting on Wall Street. Okay. It's good. It's good. How are we doing? I hope we are doing well. I hope we are doing well out there. What is going on? Discreet Win Lambo, Chris. I am confident with your scenarios. I mean, there's honestly, it's like, how do you deny like what happened in January and June? And like, it's so easy to connect the dots that I think it's hard to deny when it comes down to it. They're bullish on AMC and GME. Tomorrow is the anniversary of $72 run, bro. Yeah, I think it could be quite interesting. Futures are up just a little bit here as of right now. Nothing too crazy. S&P and the NASDAQ up about 0.1%. Bond yields actually dropping about 0.01%, so not too much there. That's really what is catching the markets a little off guard. You have quantitative tightening that started today, which the last time that happened, the markets fell 35% during 2018, and you actually bottomed the day before Christmas Eve. Markets were open, and you actually did bottom and then seen a recovery after the Fed U-turn. But a lot of this was caused by quantitative tightening, and that's what a lot of people are definitely starting to fear this time around, that hey, it's actually here. So you did see a lot of longer duration growth stocks really sell off today, not even just like AMC, which you could make the argument that AMC to a certain degree is a growth stock. Maybe not the best fundamental growth stock out there, but there is definitely an argument to be had that they are definitely paving the way to become a different company in the future, like Adam Aaron has said repeatedly, many times now. But so yeah, I think that is very exciting. NWO, what is going on, brother? It's good to be back. I missed the live stream. Live streams, what did we miss? 2 or 3 of them? I don't know what happened, but first it was sinus pressure. Like every time I would cough, my head would feel like it was going to explode. Maybe not that extreme, but it would hurt. And just full on the whole body ache thing. And then over the last day, it's kind of switched to a little bit of the sinuses, but like really in my chest. So if I cough, that's what it is. My throat has been sore for days now. But you did not count Top Gun Maverick box office yet. Actually, my mom went and seen Top Gun. I have not went and seen it, but you got a lot of good reviews. Edward Morgan, baby. Man, I hope the stock market and life treats you good, bro. He says, still here, been working crazy hours. Well, I appreciate you and all the love and support you show. It's wonderful, man. It's absolutely crazy. But, you reap what you sow. And you are going to get yours, my friend. Let's go, baby. Dave. When I see your name, Dave's Brew Review and Crew, I always think Dave and Buster's. That's the first thing that comes to my mind. And I almost said it. The SEC is eating paste right now. Yeah, they're in a bind, huh? Growth stock in emerging, reborn, traditional industry. Yeah, it's kind of wild, huh? Donkey Head Cole was running around. Oh man, I'll, I'm like, man, is this monkeypox? If I started to break out in some shit, I was gonna trip out. Man, the news is wild. What is going on, Cheese Chaser? I'm sick too. Hope you feel better. Let's go, baby. Yeah. Man, like, somebody else I know too was feeling the same way as me on the same day. Actually, two other people, and I'm like, man, what is going on? What is happening? I had actually had the fan in the window because it was felt really good. Like, I don't know if you guys can hear the AC in the window. Um, haven't quite put central air in this house yet, which I definitely should, but wanna fix it up and rent it out and get a new house. But mortgage rates had to go to 7% faster than they did during the Civil War. But I was sleeping with the fan open. It was all cold. If you guys know anything about Michigan, this will make sense to you. But I woke up the next morning and it's like hot and humid. I think it was like the quick change or something just clapped me, dude. It was terrible. We're not wrong. We're just early. Dumb big heads on Wall Street are about to lose big here since 801. Yes, 100%, 100%. Ready for Moaz so I can trade full time. There you go. There you go. Movie is great. You should go with Ling Ling. Your family enjoys for sure. My Ling Ling, Ling-a-ling. Yeah. Yeah, I don't know if she's almost 2. She'll be 2 August 21st. So, she's getting to that age where she'll almost like sit through a movie if she likes it. She'd probably freak out though in a theater. She'd probably love that. Do they do like 3D movies anymore? I feel like I haven't seen a 3D movie since I was a kid. But she probably loved that too. All in on AMC for 17 months, adding weekly. Well, there you go. I mean, fortunate thing is at these prices, you're not really buying the like fluff or the momentum, right? You're kind of just straight up buying the business, for a lack of a better like analogy here. AMC's trading at a 1 price to sales ratio. If they go back to pre-COVID levels, or pre-COVID revenue numbers, which I think they will. But also I think they'll have a higher profit margin than 2% because AMC 2018, 2019, I didn't look back and analyze how far back their profit margins, if they were smaller than that or bigger than that. They probably were larger at one point in the past, but the recent history over the last, call it, 3 to 5 years, they were at a 2% profit margin in a good year and around a 2% loss in a bad year. So if AMC could even do like a 4 or 6% profit margin, which is more in line with the theater industry, hopefully more than that, right? Once they get their other initiatives out there, like credit cards, their popcorn business, so on and so forth, then that's gonna be really, really good. And I think that's just an added bonus to anything else that happens between now and the end of the year or next year. But I am very excited about the executive order. Is June 3rd the new March 3rd? Also, wasn't Lou saying Ginsler was for retail? Well, I would be careful just putting a head on June 3rd, right? Because June 3rd is a Friday. It's the day the executive order goes into effect, right? And I do think it's going to be bullish. I think tomorrow is probably going to be bullish, and then I think Friday's probably going to be bullish as well. But like we've seen in June, the executive order actually went into effect May 27th, and you did not peak out for 1, 2, 3 trading days after that. So I think, just extrapolating history here, which history doesn't always repeat itself, but it usually does rhyme, then you'd be looking at like Wednesday or Thursday of next week is when you could, in theory, peak out. But if the executive order does not get retracted, then I think you're going to see something more explosive than anyone else realizes, and that's kind of why I'm so confident making these claims. But I want to be fully transparent with you guys. Anything could happen. They could come out and say, tomorrow the executive order is going to be delayed, and then anything I say is complete bullshit at that point. But if it goes into effect and it stays into effect at least even a couple of days, then I would expect to see a pretty dramatic movement up. That's what happened last time around, twice. I don't think the third time would be any different, but what is different is the underlying market dynamics. It's very expensive to go out and get a loan, so servicing your debts is a lot more expensive now. Like think about a year ago. Was it cheaper to buy a $250,000 house? Was your mortgage payment cheaper a year ago, or would it be cheaper now? It's gonna be like 45% higher now, roughly, give or take, right? Interest rates have went from, like, dude, I got like a 2.8% rate on this house, and now, even with like perfect credit, like essentially roughly what I have, like 760, which is fucked up because with credit I just only have like 5 or 6 years, 7 years maybe with credit history, so that's what kills my score. I've never missed a payment, but even with great credit, you're still getting destroyed on any kind of loan you want to get, whether it's a personal loan, a home loan, margin loan, anything else. It's all going up, so that's a lot different. Securities are through the floor. Like, this is the worst start of a year in like a long time. I heard since 1939, the first year World War II started, but we actually were positive, I believe, in the S&P in the month of May about 1%, but it doesn't even move the needle. And if you think about the bond market as well, like, everything has gotten destroyed. So if somebody had like $1 billion of margin, and I used this example in videos earlier, in the start of the year, and they didn't pay that down, well, now their portfolios have lost a lot of money. The last thing they want is their short positions to go against them. And right now specifically, you guys understand what's really going on in the markets, right? Like, you guys understand this. People are not selling AMC, DraftKings, SoFi. They're not selling these stocks that are down 70, 80, 90% in 6 months. There is no buy and hold investors that are currently selling those stocks, or far and few in between. What's happening is the way these hedge funds are trying to hedge out their portfolios, and why short interest on SoFi is 20%, AMC's 23%, right? DraftKings has got to be in the 20s, 30s percent range. They're just shorting those stocks. That's it. Because they're like, there's no hope for those stocks for a while. We'll short those. So markets fall, we'll be okay. We won't have to sell as many stocks. But when you do see that flip, it's going to be pretty brutal. Like, if you've seen a June type retail investor stock rally, look out. Look out. I mean, the markets would probably fall like they did last time. Just because. TMI face reveal is so sus. Somehow I hate him even more now. I did not see that, but I'm curious. That is funny. Any chance another outbreak coming? If so, impact on inflation rates and Fed policy? Really, when we're talking about the markets, and I imagine that's like what people would be curious about, right? It's possible another like outbreak would come, but as far as the markets are concerned, they probably wouldn't care that much. Even if a bunch of people started to die, shit like that, Wall Street doesn't care about any of that. They care about what's gonna dictate Fed policy and how much money these companies are gonna make. That's all they care about. But it hopefully not. It wouldn't be a good thing. But the biggest thing right now that is working against the markets is obviously the Fed, but the price of oil. Like, there is no way to avoid a recession if oil does not come down from here. Like, you are guaranteed a hard recession if oil does not come down ASAP. Jesus. That hurts. We gonna squeeze or what? Yes. Mo asked this week or new catalyst in July. Stock split tomorrow. Executive order Friday. Pump. I mean, there might be a catalyst, in July. I know you're just joking about that, but Friday the executive order goes into effect. So I do think next week, like we seen in June, we had 4 trading days after the executive order went into effect when we really started to peak out. But the day the executive order did go into effect in June or May, it was May 27th, the first day it went into effect, the stock did go up 35.5%. Next day it fell 1.51%. The day after that it went up 2.66%, and then the day after that it went up 95.22%. So that's kind of what I imagine it could look like this time around. Again, you could see somewhat of a delayed effect given like the big money is like rooting against all of us, all of you guys. Like, there was literally a piece put out today which is just comical. It's so ridiculous. Where is it? I'll just go to the Discord. This from Goldman Sachs. The meme stock revolution is over. Goldman Sachs says U.S. retail investors have sold most of what they bought over the last 2 years. And this article came out at 12:54 p.m. But this article came out May 25th that said retail inflows at nearly all-time high despite market turbulence. Like, it's just ridiculous. It's just ridiculous. Like, if this doesn't prove that financial media has something against the retail investor, then I don't know what else does. So of course they're gonna try to kick the can down the road some form or the other, right? There's a lot of different things people with a lot of money can try to do, but bottom line, when it comes down to it, I think there's gonna be a pretty substantial event. What's up, Tyler? Any idea why Mullen fell in after hours? No, we can see if there's a simple Google search. Oh, dude, I was actually looking this up. Does anyone live in Canada in here? I came across this YouTube channel that basically they've been living in the Canadian rainforest, like off the grid for like 3 years, and I was like, Canada has a rainforest? I was tripping out. But kind of cool though. Kind of cool. They like document everything. Doesn't look like it. Just off a quick Google search. You could go through news wires and stuff, but not exactly sure. But they did just have that good news, so it could be one of those, sell the rip kind of events. I can't borrow any more money. Yikes. Nah, shoot, nobody can borrow money anymore. You can't even get a house. It's pretty terrible. I mean, mortgage prices have not come down enough to even do anything. Alex Mayer. What is going on, girl? Haven't sold anything in months. Me either. Says your cough is really same as mine. Oh, it's bad. Start tickling your throat. Yeah, I haven't sold anything though. I have not sold a single share in a long time, and I really haven't been doing too much trading as of recently. Where I think the biggest potential to make a lot of money is really putting every dollar possible to work in, high growth stocks that will survive this. That's very important because not all companies will come back or will survive this, but quality companies that are small to mid cap companies that could 5, 10, 20, 30x in the next 5 to 10 years. I don't think we're going to see deals like this for a very long time. Like PayPal, Square, SoFi, very bullish on them. DraftKings, kind of a so-so one. There's not really much moat or brand loyalty there, but I do like them to a certain extent. What else do I have right now? Snapchat. When Snapchat falls 40% in a day, you gotta buy some of that. Fubo, which that's probably the riskiest position I own, to be honest. Fubo, but in terms of blowing through money and no risk, no reward though. Fubo could be a 50x stock in 10 years if it plays out right. So. I got door do in my poo shoe. Round of applause for the name. We sold everything, but there's still 500 million shares on loan. How? Exactly. We are all trained from birth to spend our money that we make to the 1% richer. Yeah, well, yeah, the problem essentially with that and why that actually happens is because financial education is not taught in schools. You literally have to come to YouTube to get a financial degree. Like if you watch YouTube and you're really into learning these different things, how the markets operate, right? How markets price things in, how to fundamentally value a company, or just the magnitude of other things you learn. The list could go on and on and on. You'll learn more than somebody that went to college for financials or like bookkeeping, stuff like that. Like you'll learn a lot more than you will, but you really have to expose yourself to it. Like there's not really anyone that I have ever known that invested in stock. So came across it, loved that you can take your own destiny into your own hands, and one day all of you guys will be the 1%. That's the thing, is financial education is not taught, and there's a good reason for it. You guys want to know why financial education is not taught in schools and will never be taught in schools? Because they don't want to make you rich. You can't all be rich in the world. Who's gonna work at McDonald's? Who's gonna bag their groceries, brother? So if you're even in financial YouTube, that realm, you're already doing good, no matter what age you are, no matter how much money you have to work. Just gotta stick at it. You gotta stick at it. Gold is the money of kings, silver the money of merchants, and debt the money of slaves. Well, I firmly believe there's good debt and bad debt, right? especially in real estate. Real what how did I just say real estate? Like good debt can take you very far. Like rich people, they don't use their own money. They don't lose their own money when they start companies. They make LLCs and they'll bankrupt an LLC if they have to, right? They don't bankrupt themselves. They'll make a new LLC and go borrow more money. Like you make money off other people's money, but it's got to be good debt. Like buying a below market value house with a mortgage that is very affordable, no matter if you have to sit on it for a year. If you can afford to make a payment for a year without a house being rented out, then probably good debt, as long as it's in a good location and it's not a total just shit house. you know like leverage on real estate is insane. But like cars, credit cards, most debt you'd think of is like not good debt. Margin debt, that can be okay. It's not too expensive to service margin debt, but you can also lose I mean a lot of money as well. Would put me right at 2,000 shares. Oh, there you go. There you go. Yeah, that's solid. 2,000 shares. Your honest opinion, do you think it can get over 1.5K if we all hold on for dear life? Yeah, I mean, I think anything is possible. Especially over the last couple of years. I think that has really showed everyone that anything is possible. And I think if we were going to see something like that, I mean, we have prime market conditions for it. Question is, like, I doubt after all of the scrutiny, like a Robinhood or something, or like a Webull or other brokerages, they are absolutely petrified to cancel trades again. Like, dude, that is the death of most brokerages if they do that, right? Like, so I don't really expect you would see something like that happen again. Again, it's possible, but I really couldn't see that happening after what has happened since then. And hedge funds, market makers, just where everything is at today makes a lot more sense than not to reach some pretty insane levels. Like there's a big difference between like June and now as far as the macro environment. Like hedge funds by and large had a choice if they wanted to cover or not in January and in June. Like, they had a choice. Most of them did not cover. Now, not near... I would be surprised if hedge funds, like, even a percentage of the same hedge funds this time around had a choice to cover or not. It's more like, yeah, we are going to close you out of your short position because you are way too close on your margin levels, right? That's the kind of phone calls they would be getting from, the JP Morgans, the Goldman Sachs, things like that. So that's very encouraging. Very, very encouraging. And then it's really like the domino effect at that point. Debt used for appreciating assets is good debt. Depreciating assets are liabilities and is bad debt. Yeah, that is the simple. Yeah, that is the simplest way to put it. You are right. But yeah, like simple math here. I mean, I actually want to make a video about this because this has taken me pretty far at a pretty young age, and it's something anyone can do. It makes it a little bit harder if you have like a family, but I supported my ex with 2 kids, had one with her as well. I had 3 kids. She didn't work for most of the time. And I was able to do this by myself, never got help from anyone, and worked an average job like $35,000 a year. But essentially say, hey, you can get a loan from a bank once per year for a house. A lot of people don't know this. Once per year for a house, just no questions asked. You're just buying a house for 3 to 5% down. If you buy a $100,000 house in a decent neighborhood that's going to have an average rate of appreciation of 3 to 5% a year, well, you're going to put 3% down for the down payment. That's $3,000. Closing costs, that's going to run you probably $2,000. You're going to be all in for $5,000, right? You live in that house for a year, right? Minus the mortgage payment, whatever. That's your cost of doing business. You'll pay down your mortgage loan by like $1,500 or $2,000 or whatever the number is. But don't even think about that. Well, the house, let's say it appreciates at 5% a year. You technically just broke even on your, money down as well as your even your closing costs after the first year. Then in that meantime, if you could save up another $3,000 to $5,000, or maybe upgrade to something a little bit more expensive and buy another house and then rent your last house out. that's a huge thing that you won't hear people talk about, especially not financial media. And that's personally what I've done over the past couple of years, and it's probably the least risky way to get into real estate, because like if you live in a house, like if you guys own a house right now and you want to buy a rental, you have to put up 20%. No other way around it. Or I believe it's 15% and renter's insurance, which is just like at that point you might as well put 20% up. So that's like buy a $100,000 house for 3%, or buy a $100,000 house for a $100,000 house for $3,000, or buy a $100,000 house for $20,000. You get the gist there. So, very, very good. I don't know if that's like a bank hack or what, but it's something anyone can do. Mr. Simon in the house, baby. What highs do you think we will reach this month? It's really hard to say, but can I say that we would reach all-time highs? Is that like fair? I think that's pretty fair. He said 100 million. He said 5 quadrillions. I like it. I'm not selling you until I buy AMC when it's all said and done. Yeah, we're just gonna buy the whole business, okay? Buy land and build it cheaper. Yeah, you can do that, but it just takes a while, and then you're gonna be paying pretty much market value, if not over market value. So preferably, like with this house, I got this house substantially under market value. All it needs is like how I would want it to be rented out. And I've done this in the past with other houses as well. You literally put in some of those vinyl plank floors, brand new, paint the walls, rent it out. And that's basically the gist of it. And when you get a mortgage like that too, they won't let you, no bank will let you get a mortgage on a property that is not worth that amount. So if you offer $200,000 on a house, but it appraises at $170,000, well, you got to put up $30,000 or you can't buy the house. That's where you go back to the sellers and say, hey, this house appraised for $170,000. It looks like it needs even more work. So really, it's probably worth about 155, and that's what I'm willing to offer you. Especially in this market environment. Perfect. Perfect. People, you'd be surprised what smack them in the face with an appraisal does for them. Yeah, need 70% down on. Yeah, no. Oh, see, I like 3 to 5%. That's perfect, because then you can take advantage of the compounding nature of real estate, right? You get 5% appreciation, $105,000 house. Well, 5% appreciation on $105,000, that's going to be what, 110, and so on and so forth. 10 years from now, you're pretty much going to double your money in the houses you bought 10 years ago. And then by then, 10 years, you could have 10 houses, and what you put up, let's say you put up like $50,000 in 10 years for down payments, you're gonna have over $1 million worth of property for $50,000. That's a 20x on your money. So that's just equity value. That's not to mention your cash flow that you're gonna get per month. So I do like that. I do like the real estate. And it's relatively safer. Is there really a popcorn shortage? Dude, I seen that. People have posted that in the Discord. I'm like, wow. If there is really a popcorn shortage, which, yeah, I mean, it's popcorn and grains, just in general, people are not planning enough. I live in Michigan. There's a lot of cornfields, and it looks a little bit more shallow than other years, to be honest. Doesn't look like there's as many crops growing this year. I don't think I've seen a cornfield yet, honestly. Come to think about it. Have I seen a cornfield? Maybe I... Jeez. Maybe I didn't pay attention, but... Not in California. Houses are high above market value. People will pay the difference. Yeah. Nah. Which is crazy, because California has a declining population, but people just, want to live out there. Which, California weather alone, only 6% of the world has California weather. Like, constant, I should say, like, what is it, SoCal? Like, where it's like 75, 80, in between that range, like, the whole year. Ken Griffin, we love you. We love you, okay? You come here with hate, and we embrace you with love. But thank you, Cheese Chaser. He said we cannot tolerate that. That was a quick timeout. But we love you. It's okay. People will pay all the closing costs in Florida. It's insane. Yeah. I wonder, just, with rates this high, so quick, it's going to have an effect, but you don't have that systemic risk in real estate like you did during 2008. So, that's a little bit better than not for my purposes. I would like to buy some cheaper houses, and real estate prices will come down, but probably not in a big way. Like one of the houses I bought was like perfect timing in early 2019, like right after the stock market bottomed, or around that time when the stock market was falling. Real estate was falling as well. It dropped like 10% in 2 months from December to January, and I actually bought a home in that time. It was perfect timing, but usually real estate is not that volatile. Said Florida is the fastest growing state, and the weather is brutal. Yeah, I feel like you need central air in Florida to survive. Go to Blake's, you'll see a cornfield. Well, then it's confirmed there's no corn shortage. The popcorn will be there. Man, AMC should get their contracts ready now with the damn wholesalers. Buy a side-by-side for the summer. I need this to pop some. I've been seeing a lot of people with the buses that they've converted into, like, I don't even know, like RV houses, and they're actually pretty cool. That would be really, really neat. Average market supply is 6 months. We went from 4.5 months supply about 6 months ago to month supply now. Yeah. It is bullish for AMC. We have our own land. They're playing for us. How long till we get a major correction? Real estate. So hard to say. Because there's no like rhyme or rhythm to it. It's so slow moving. But the biggest thing that I really want to look at right now are some of the home building companies, like some of the home building stocks. They're reporting good numbers because their orders that they are building right now, they were placed a year ago or 18 months ago, right? So those companies are still doing well, and they're projecting that they're going to do well. But once people are like, the orders coming in now are probably very shallow. So that's where you might start to see more people, freak out a little bit more. But so many people refinanced and, got their rates at 2%. I think it will come down. I don't know when, but I feel like it's hard at this point to get like a big, correction necessarily. But when the unemployment rates go up or when we head into a recession, that's when it'll happen. Like the three things that are prominent during recessions: death, divorce, and defaults. So the biggest reason people sell a house is because of a divorce, and the biggest reason for a divorce is money problems, and the biggest reason for money problems is a recession. So remember that, and that's when the housing market will crash. And it all comes down to oil. Real unemployment is 20%. Summertime hits, and yeah, unemployment goes up a lot. Like, nobody wants to work in the summer. You think we can reverse and go back to 16 tomorrow with AMC? Yeah, I don't think that would be too crazy. How big of a move would that be? I mean, that would be like a 20% move? 25% move? Or am I tripping? Maybe it's more than that. Maybe it's like... Yeah, that's like a 25% move. That's definitely possible. And you're at a pretty important level too. I mean, you're just under 13. And we've kind of been bobbing in this range for a while. We broke out above 15, couldn't hold that, which was a little disappointing, but curious why none of the other YouTubers talking about the executive order and its possible effect on AMC. Sure hope you're right. Yeah, I was kind of thinking the same thing, honestly. And I mean, here is the article that I have read. It came out May 13th, 2022, so not all that long ago, but it's something that is really like under the surface. Krispy Kreme, he might be in here right now, he might not be. Oh cheese chaser, that's funny. it's not really something that's like super stand outish, right? Like I never realized that this was like, if you were to put one thing on the January and June rallies and line it up to specific dates, it is the executive order, like banning Chinese securities being used as collateral. That is what caused, in my opinion, January and the June rallies. It literally lines up to the dates, and both dates that the executive order was extended, the stocks crashed the next day and never went back to those all-time highs again. So, Krispy Kreme had pointed it out, but yeah, I really haven't seen many people talk about it, which could kind of be bullish in a way. If nobody else is talking about it, then maybe it just automatically goes into effect, and maybe the government doesn't realize it. I don't know, which is kind of crazy to say, but Cheese Chaser says 2 things cause a divorce: money or sex, too much or not enough. That's good. That's good. I like that. I like that. That's true. That's very true. People just change their minds all the time. Please explain what happens if GME splits. Well, like a traditional split would just be like if for simple math's sake, if GameStop was $100 a share and they wanted to issue another share, like essentially double the outstanding share count, then you would now have 2 shares of GameStop, but the share price would be $50. So a lot of people get excited for it because it becomes more accessible for more people to buy, and over time, theoretically, you could do better. Like there's less potential that hedge funds could make by shorting the stock as well, because if the stock is at 120 or wherever it's at right now, like 120, 125, in a market environment where a company is unprofitable, where there's really no valuation support, right? Especially for GameStop, because AMC, I can make you a very strong argument that AMC is a much better fundamental company right now than GameStop, and I think that's pretty clear, and I think everyone knows that. But if the stock's at 120 and it doesn't even matter because there's no fundamental support, then the odds of GameStop dropping to 60 from 120, so falling 50%, are theoretically a lot better than the stock dropping from 50 to 25. Or you could go, extreme with those examples, but there's less meat on the bone. Like if you short one share, you would essentially make more money, right? If it dropped 50%, you'd make $60 from here. If it's $50, you'd make 25 from here. So there's a lot of different reasons why, people are excited, and then you do have the dividend part, but which I feel like we heard about that a while ago. We don't have any debt or mortgage, so we'll be okay. Yeah, and that's good too. I mean, that's the best way to do it. Like if you don't have to get a mortgage, just buy the house. I like the leverage that you can get from essentially the bank's money. But nothing wrong with just owning it outright. I take homeowner deposits and buy AMC with it. He said, just kidding, not kidding. That's funny. No, I'm pretty fair when it comes down to that. Oh, it's still low. Oh my gosh, I didn't realize it was still low. My fault. My fault. No, I don't really take. Um, Try not to take deposits from people unless they really mess stuff up. Hey, what's this NSCC 2022-003? I'm not sure off the top of my head. I don't know if I've talked about that or not, but the NSCC, the numbers there, just you can't remember one specifically by the number. At least I can't by the numbers, unless it was a important one, like NSCC 005. That one was pretty important. AMC, same addiction. It's my savings account and it's large. There you go. There you go. I personally think the best savings account right now, which I know there's going to be a lot of hate for this statement, is the stock market. Which is so ironic because, I mean, it's just getting destroyed. But someone asked earlier if hedgies had time to prepare for executive order. Last few run-ups implemented in January, then got pulled and re-implemented in May, then pulled. That is a really good question. I don't know the intricacies of like how they would necessarily like, well, I know how they would prepare for it. That's not the right way to put it. But like if they did or not, I that's a tough one. That's a tough one. But I don't think a lot of the decisions of the actual trading activities are done by humans. I think a lot of it is done just by algos, based off of technical indicators, news headlines that come out in more or less real time, like what the Fed is pricing in, what they're talking about, things like that. Like I believe it's like 80 or 90% of the trading volume is done by algos. So I don't really think like they are programmed to, say, hey, executive order kicks in on Friday, we should go short a bunch of stock or buy a bunch of stock. I don't think it's like that, at least at the large trading algos, because they tend to react in real time rather than not. That's why like market maker trades, like if you look at Ortex, they don't come up in the interesting flow sentiment, right? These orders, these are like actual traders putting them in. This is not like market makers hedging out for like calls or hedging out for puts. Like these are individual traders putting these orders in. And specifically, look at this one. July 15th. This one came in 20 minutes to the end of trading today. A $20 call, 2,000 contracts for $123 a piece. $250,000 bet that AMC will be above $21.23 per share by July 15th. So I thought that was pretty interesting heading into tomorrow. Definitely the biggest order that we've seen all day by a long shot. Biggest order we've seen in a while, actually. But yeah, that's my thoughts around it. But I can buy every single one of you for a price. Yes, you can buy me for the low cost of hitting the like button and listening to my financial just talks. That's it. I'm very easy to please. Buy me food and we're good. Get me some Wendy's. Give me that salad. Actually, I was actually eating it today, and it fell off the bed and went all over the ground. The apple pecan salad from Wendy's, my favorite salad in the world, and just spilled all over the ground. Very sad about it too. But yeah, that's it. That's it. Very, very low maintenance. How to find a house you want. Put pennies in the mailbox. It will be for sale the next day. Just kidding. Yeah. Pretty much. It's over 100 million in volume. It's at 14 a share. That's pure algo. Yeah, it is. 100. Yeah. Well, 100,000%. It's all essentially algos at this point. Can I put less money into Bitcoin, leave the country, then pull it out overseas tax free? I think so. I think you can. Why not just move to Puerto Rico, where they don't pay taxes? Just move to Puerto Rico. It's an American territory too. Puerto Rico is going to be a state one day. I think like 45% or so of people want to become an American citizen, which is kind of cool to think about. Puerto Rico, the next American state. I definitely want to have a house in Puerto Rico or just move there one day. That's why Peter Schiff lives out in Puerto Rico. He says, bro, there's no taxes. Fucker. How's RDBX? $162.4% short interest of free float. That's nasty. That's nasty. That's nasty. 3.16 million shares sold short. Cost to borrow minimum 471%. Cost to borrow average 655%. Cost to borrow max 806%. 100% utilization. Days to cover 0.17. Free flow out on loan 131.48%. Looking quite juicy. But there is like a buyout already in place for Redbox too, so we just have to keep that in mind. But lots of call options coming through today though. Positive order value of 87%. It says 2 orders totaling 17.47 thousand, but that's not true. Oh, actually not today. You didn't see a lot of call activity today, but you have over the last couple of trading days. By and large, it's been very bullish. Today you did have the 2 June 17th expirations, a $6 call for $30.38 thousand and a $3 call for $114,000. So yeah, it definitely looks good there. They can come get you in Puerto Rico. He's like, oh man, I gotta go to a no extradition country. I feel you, bro. I feel you. They're gonna pop up at your door like, you owe us $20 million for your Bitcoin transactions and your taxes you are avoiding. Thank you. Have a nice day. And then they're gonna take your Lambo. They're gonna take your private helicopter, and they're gonna keep them. It's good though. I seen Tony D and Jackson Hunter talking about it on Twitter, and they looked into it. The NSCC, I'll definitely have to, look into it. I don't really think there's like any one thing they could do that would like prevent like a short squeeze necessarily in any given equity, or like you'd really have to just shut down the stock market at that point. Like if things really started to go south, you just have to shut down the whole market. But then there's a problem with, confidence. If you can't have the markets open, you have no market. That's what happened during the crash of 1987, Black Monday. Stock market fell 20%, 22% that day. And only like half of the Dow stocks were even trading because there was like no buyers. There was no market. So people were questioning, well, no, the stock market stopped trading like most stocks, but the CBOE, the options market, was actually still functioning, but there was no market to price things off of, so you didn't know if you were getting a good or bad deal, and it really creates a lot of trust issues in the markets. Like if investors had the concept of you could buy a stock today and they could shut down the markets for a day or even an hour or whatever, the next day or the next week or month, that's a problem for global markets for sure. But I'll definitely look into that one. Any of those NSCC rule changes are pretty important, and that's something that people can't forget about as well. Like this time around, you've seen a lot of those rule changes come into effect, and that's going to help the overall squeeze, in my personal opinion. Some of the big ones we've seen, like the collateral haircuts, the countless ones we've talked about over the last year, are still going to be very important. There's a link to the ruling and it was approved. Yeah, I'll definitely have to look into it for sure. There's no state income tax. It's a retirement state, and tourists pay the difference. I could see that. That's a good way to put it. Florida's also very lenient on crypto. Like if you wanted to do something like venture capital with crypto, like you definitely want to go to Florida. Definitely, that's the state to be in. Are we still going to run up on Fridays? Everyone was predicting yesterday. Everyone seems to have gone quiet on this now. Oh, I still think so. I mean, I said earlier that this really doesn't change the overall thought process or the concept of anything that I've said over the past week or two specifically. But what this really did today, in my opinion, was really a shakeout. But it if you didn't have a position on AMC, I think today possibly was one of the last great days to get a position. Do you think retail owns more than 200% of the float? It possible. I do think there has been a lot of people that have traded in and out, but I do think more people have continued to buy rather than not. And even Adam Aaron, months ago was kind of giving us hints that we owned like all of the float. Do you guys remember that? Like the earnings calls, the interview with Trey, like he would hint to things, but obviously he can't come out and say them directly. But I think it's pretty fair to say that we probably own over 100% of the float, which, market makers provide liquidity. So even if we did own, 200% of the float, we would never know about it. Like it wouldn't necessarily be something that would just become prevalent just out of nowhere. Like once a squeeze were to happen, that's where it could be really hard to find shares to buy back, and that could definitely drive up the price. And I think that's ultimately when we would find out like how much of the float we do own, roughly speaking. Like if it's very hard to find shares, then it's probably reasonable to say that we owned over 100% of the float. And then as people started to sell out, as the stock is ripping, more shorts are able to cover, and that's probably the closest we'll come to finding out, in my personal opinion. Thank you. I'm still holding strong. Appreciate your time. Well, I appreciate you. I appreciate you. Does retail 9%? I think we own the float 3 to 4 times over. Yeah, it's definitely possible. I mean, like, it's one of those things though that's so hard to prove. You know, they don't even like to do share counts all too often anyways, so that would be interesting to get a share count now. Alright guys, that is gonna do it. I am so sick still, which is, I don't know what it is, man. I don't know what it is, but we go ahead, hit the hay so I can get up in the morning and be a productive member of this community. Thank you guys for tuning in. Appreciate every single one of you guys. Thank you, Edward Morgan, for the super chat. All of the members, love and appreciate every single one of you guys. Thank you for tuning in. We'll be live tomorrow. We'll be live on, no, we won't be live on Friday. Oh, that's unfortunate, but we will be live tomorrow to talk about it. And heading, obviously, we'll talk about what to expect on Friday. I think we're going to get some bullish activity here over the next 2 trading days or so. Mucinex D, not medical advice. yeah, I definitely need some of that. And some cough syrup. But yeah, we'll definitely be live tomorrow as well. Feel a lot better now than I did, so that's good. Yes, appreciate all you guys.